Hey everybody, Smart Silver Stacker here. It is Thursday, March 3rd, 2022. It's 9:31 a.m. We're taking a look at the precious metals spot prices over at kitco.com. And as you can see, kind of a mixed start for the metals. Gold slightly green, silver slightly red. But I think the important takeaway from these prices is that gold and silver are hanging on to their gains from the past couple days. So what will the rest of the trading session bring? Hard to say, but at least for now, gold is still well over the $1,900 level and silver is still up over 25 bucks. In today's video, we're going to be taking a look at some more historical data, and we're going to be using that data to extrapolate some price targets for silver specifically. The chart that we're actually going to be looking at is this one. It's kind of an interesting one. It's the silver to oil ratio. And the reason I wanted to take a look at this chart today is actually on the recommendation of a viewer. Danny Presson left a comment on a recent video. He said, "It's worth noting that currently oil and commodity prices are rising much faster than silver. This may mean silver is a buy right now, even though spot has increased. Track the oil to silver ratio over time. There are clues out there." So thank you very much, Danny, for that comment. And that's exactly what we're going to do today. We're going to take a look at this silver to oil ratio chart. This is the long-term chart over at macrotrends.net. And what this chart represents, this is the price of silver divided by the price of oil. So this chart tells you how many barrels of oil you could buy at any given time over the past 70 years or so, how many barrels of oil you could buy for 1 ounce of silver. And as you can see, there is a very regular pattern to this chart where you see it trade within a range, and within that range it'll have a spike up and then a spike down and then a spike up and then a spike down and a spike up and a spike down. I mean, this is very regular pattern that this chart displays. And not only does it show us that the ratio kind of seesaws up and down on a regular basis, we can also see that a lot of these peaks and troughs are sort of exactly within a range. For example, you can see in 1968 you had a peak up at 0.81, and then 5 years later, in 1973, you get another spike up to 0.81. And then in 1980, of course, you had the big bull run in metals. That was the only time the ratio got above 1. And in January of 1980, you could actually buy 1.1 barrels of oil for an ounce of silver. But as we all know, that didn't last for long. And, we're not going to use that data point in this video because I have used the 1980 data point in previous videos, and I get a lot of criticism that, that was the Hunt brothers and you can't rely on that. So, okay, we won't talk about 1980 too much in this video. Although, I will point out another interesting thing about this chart. Not only do we get these kind of repeating peaks and troughs, and you can see it's not just in 68 and 73. This is a trend that goes all the way through the chart. You get a peak in 1983 at 0.46, and then another peak at 0.5 in 1986. So, this is something that happens regularly on the chart. Even in 2011, you see a spike up to about 0.47, and then in 2016, 0.49. So again, the peaks are close to each other. But the other thing you'll notice about this chart is that the ratio can spike and move up on a bull market in commodities, like what we got here in January of 1980, where the price of metals moved up faster than the price of oil. So you were able to buy more oil with your silver, which is what this chart represents with this spike. And you can also get a spike like that on a bear market in commodities. Like in March and April of 2020, we saw commodities falling, but oil still got cheap relative to silver because the price of oil fell faster than the price of silver. If you recall, in March of 2020, I think the silver price got down to about 12 bucks. It was under 13. The oil price at that time was under $20. So, both of them fell considerably, but oil just fell faster than silver. So you could still buy more oil with your silver. And then the last thing I'll point out is that right now we're close to one of these troughs. The last trough, the last bottom we saw was in August of 2018, and it was right around 0.2. And now we're at 0.25. There's a little room, of course, for the ratio to fall farther to get down to that last peak, but maybe that won't happen. It's not like it's a rule set in stone that this would fall to exactly the level of the previous trough. In fact, you can see that we kind of spiked up higher than the past peak. So maybe now we'll see, this might be the bottom at 0.25. But one thing I do want to point out is that we are at the low end of the chart. Now let's compress this to the 30-year chart because we don't want to look at that 1980 number, I know, because, that was the Hunt brothers, manipulation and all that. So we'll exclude that data point. But one thing we can look at here is the 2011 bull market in precious metals. And we can see we got a spike on that one. So again, in 2011, metals moved up faster than the price of oil. So we saw a spike up to around the 0.43 level in 2011. And then in 2015, remember, we saw a drop in the price of precious metals. So we see this spike up again as, metals fall faster than the price of oil. If we were to repeat this trend, if we were to say move up to the 0.8 level, because that's where the last spike was. So if we move off this trough here and we move up to another peak of the ratio, history would tell us that it'll probably be somewhere around the previous peak, which was in April of 2020 at 0.79. So let's say that this ratio moves back up to the 0.8 level. Well, there's really two scenarios that could occur under. Like I mentioned, we could see commodities come crashing down and oil would fall faster than the price of silver. So that's one way we could get back to this 0.8 level. The other way is that we could see a bull market in commodities and we would see silver rise faster than the price of oil, and so therefore you would again be able to purchase more oil with your silver even though the price of both was increasing. So those are the two possible scenarios, and at this point, I really do think either one of those scenarios is possible. I think a lot of it depends on what the Fed does moving forward. If the Fed continues to try to rein in inflation, if they raise interest rates in a significant way, if they really do get aggressive with that, I think you could see a deflationary collapse. You could see asset prices decline across the board, and you could see the price of oil and silver both fall. And this chart would indicate that if we do see that, the price of oil will fall faster than the price of silver. What would the prices get to? I'd say maybe you'd see the same levels you saw back in March of 2020. You could see silver fall to maybe the $12 range. You could see oil fall to under 20, and that would get the ratio up to that 0.8 level. And if that happens, I would be buying both oil and silver hand over fist, because I think we all know what the Fed's reaction to that kind of a deflationary collapse would be. They're going to intervene. They're not going to allow asset prices to fall that much. So, if we do see a deflationary collapse and we see this ratio spike back up to 0.8, I think that what we'll see the Fed do will be similar to what they did in March of 2020. They will open the floodgates of liquidity, except this time they'll print even more because they'll have to, because every time you pull that trick of trying to reinflate the bubble, you gotta print more fiat currency to do that. But the other scenario is that we get a bull market in commodities, and that certainly seems in the cards as well. With rising inflation, with this rising geopolitical instability over in Russia and with Ukraine, however that may happen to expand, and this economic warfare in the form of sanctions, that's going to disrupt supply of a lot of commodities. So I could see the price of commodities moving up higher. And if that is what happens, if that's what gets us to the 0.8 level on this ratio, that is the scenario which we will use to extrapolate a price target for silver in this video. So if we go over and take a look at the current price of crude oil, you can see it's well over $100 now. Crude oil up to $109.17. And if we just use that value, the current price of crude oil, and we were to move that ratio to 0.8, you would need a silver price of $87.33. You have to keep in mind that in this scenario in which both commodities are moving higher, the price of oil is going to be moving higher too, just not as quickly as the price of silver. So let's say that oil moves up to $150. I don't think that is outside of the realm of possibility whatsoever with the current geopolitical situation, with the amount of fiat currency that's been created. Absolutely, I think we could see oil move up to $150. If we get cut off from Russian energy supplies completely, that could absolutely happen. And if that was the case, if oil moved up to $150, you would need a silver price of about $120 to hit that 0.8 silver to oil ratio. And, that's kind of comparable to the price target that you get when you examine the gold to silver ratio. I did a video on that a couple days ago, so if you haven't seen that, you should definitely check that out. examining the gold to silver ratio gives you a price target of about $126. That was the conclusion I came to in that video. So, $80 to $120 I think is a pretty reasonable price range for silver in the event that we see a commodities bull market that gets this ratio back up to the March 2020 high. So who knows whether we'll get a deflationary collapse and a drop in the commodities prices, or if instead we will see a commodity bull run. It's kind of hard to say. Like I said, I think it all depends on the Fed. If the Fed doesn't raise rates and they're a little bit more dovish, if they use the ongoing conflict in Ukraine as an excuse to kick the can down the road and not raise interest rates and remain super dovish, I think we could go the route of the commodity bull run. Also, if there's an escalation in Eastern Europe in a big way, if energy supplies are disrupted, then I definitely think we could see the bull run in commodities as well. Let me know what you guys think. Let me know in the comments below what you think the likely scenario is that will get this ratio back up. Do you think there will be a deflationary collapse, or will there be a commodity bull run? And if you guys enjoyed this video and you'd like to see more like it, then check out the videos that are popping up on your screen right now. Thank you all very much for watching. Don't forget to like, comment, and subscribe, and I will catch you next time. Smart Silver Stacker, out.